stock market going to crash? If so, why, and what are the scenarios and the downside price targets? So those are the questions we're going to answer in this video. And if you guys are watching this in some time further inside the future, I'm just going to add a timestamp so you guys know when I recorded this. I'm recording this Friday, September 11th at 12:55 p.m. Eastern Time. So I came out yesterday pre-market, Thursday pre-market, and I had told members of our trading advisory, if you guys are interested inside the trading advisory, link in the description below, pinned inside the comment section, I had told them that for the NASDAQ to possibly even think about going lower, you needed a 4-hour bearish trend change. So you had to go onto the 4-hour chart, and currently right now we have NASDAQ futures that are up, and that you would have to see this thing break bearish. Well, did we see that? Yes, we did. So that means that, and I had pointed out two scenarios. I had said that we could either go from this high right here, then we could come down, and then we could just come up and then come down, and then just chop sideways like that. That was a secondary scenario. I said that was less likely, but it's possible. And the primary scenario was that we got a high, we got a low, we're going to have a bit of a pullback, lower high, and then we're going to continue lower. That was a primary scenario. And I had said that it was going to be telling because we were going to figure out whether the primary or secondary scenario was going to play out based on that 4-hour trend change. We got that 4-hour trend change. The market came lower. It did a 4-hour bearish trend change. And the way that looks is pretty simple. On the 4-hour chart, you need to have a high, a low, a lower high, and then a lower low. Or another thing that you can have is that you can have a high, low, consolidation, and then lower low. You need one of those two things to happen, though, for a bearish trend change. But we did get that bearish trend change. So that means, for sure, the NASDAQ's going to go lower. And we got that broad market, too. But the NASDAQ was really the one that had the weakest momentum. So that means, for sure, yes, the market is going to go down. So we got that first question answered. Yes, the market is going to go down. Now, let's answer why. We got a couple of things that I've gotten written right here that we're going to talk about. Of course, we're going to talk about the S&P, NASDAQ, and the Russell. But also, I want to talk about the dollar. DXY is a dollar index, and I want to talk about broad equity advanced decline lines. So let's just look at some international stocks. So let's look at the UK 100 GBP, and that is the FTSE 100 measured in GBP, which is British pounds. And when looking at that right there, what we're seeing is that right here, let's actually go back to the NASDAQ so you guys can get a better view of things. Looking at the NASDAQ, it came down, and look how much higher it is. And then if we look international, though, at something like the FTSE 100, which here would be UK 100 GBP, it's barely come higher. It's barely recovered, while the other indices, primarily the American indices, are at all-time highs. Why is that? Well, the reason international indices like the UK 100, GBP, which measures the FTSE 100, the DAX, Euro stocks, Nifty, look at broad emerging markets. The reason all of those are still down while the American markets are well into all-time highs is because all those other stock indices are measured in other currencies, while the American stock indices are measured in US dollars. And because US dollars are becoming so weak, the stocks on a relative basis, since they're priced in US dollars, they look so strong. And so that's the reason as to why. And what are we seeing in the dollar? Well, from a fundamental perspective, on a legislative perspective, we're having less fiscal stimulus. There's a complete deadlock. And for the rest of the election season, we're not going to have any more stimulus as the most likely scenario. And most likely, we're not going to have any more monetary stimulus until fiscal stimulus comes out, and the Fed's balance sheet is completely plateaued. And that's why the dollar is starting to gain strength once again. But when the dollar gains strength, American stocks tend to go down because American stocks are priced in dollars. And that is why foreign stocks have not done as well, because local currencies of those foreign stocks have been a lot stronger while the dollar has been weaker. So when we're looking at the dollar, we see actually the complete inverse. So let's actually go to the dollar index first and see what's going on right there. We see the complete inverse. So the market went up, but what happened to the dollar? Continued to go down. And then over the last couple of days, what have we seen? We've actually seen the start of an uptrend on the dollar. So we got this low, we got a high, we got a higher low, and then it's going to higher highs. This is the start of an uptrend. And my price target for the dollar index is that it comes all the way to this level right here, close to 96. And so we should see the dollar come higher, and there's a big air pocket right here, meaning there isn't much resistance, so the price can easily come up. And the dollar goes higher. Of course, stocks that are then priced in dollars will, on a relative basis, have to go down. So what's gonna happen then to the S&P? Let's look at SPX 500 USD, and this is going to be a weekly chart. And what we're going to start to see then is that for sure, I've already said for sure it's going lower, right? How low is it going to go then? And what is the scenario that's going to play out? Well, there's two places it can go. Now, there are a lot of air pockets, so when it comes down, it's going to come down really quickly. One of the places it can go is around here at 3,200. It can stop at 3,200. There is some support right there. And it's going to fill the air pockets. It can just stop right here and have some weeks of downside and then just continue higher. That's one of the things that can happen. The secondary scenario, though, is that if we really get a lot of selling, and the way that we're going to know that is that we can go onto the one-day chart, and on the one-day chart, we're going to have to see this 20-day simple moving average go extremely bearish. And then on the one-week chart, we're going to have to see the CCI momentum indicator go extremely bearish and have bearish divergence. If we see that, if we see the slopes of the simple moving averages on the daily go a lot lower and the CCI go a lot lower extremely quickly, then that's going to tell us we have strong momentum to the downside, and we could head down to the 20-day simple moving average, and right here, that would be down here at about 3,100. But after a lot of days of going down, the moving average, of course, that takes that price into account is going to be even lower. So that's going to bring a price target to around $3,000. So that's my price target right there for the S&P. I'll say for the S&P, primary scenario, we just head down to 3,200 if we don't have a lot of momentum. But look at those momentum indicators. Look at the CCI. Look at the slope of the 20-period simple moving average on the daily. If we look at the slopes right there, and if they really start to look bearish, then we could actually head down to about 3,000. What about the NASDAQ? The NASDAQ is a bit more clear, and it is also a bit more bearish because it's just gone up a lot. So for the NASDAQ, what am I expecting? Right here, we had a big up move in the NASDAQ. In the NASDAQ, we've got a lot of air pockets to fill. Whenever the market goes up really quickly in an unhealthy manner, it creates this poor structure on the downside. That's what we got on the NASDAQ right now. We have really poor structure on the downside. My price target for the NASDAQ is going to be down here at this area of support between 9,000 and 9,700. So between 9,000 and 9,700, that's where the NASDAQ should bottom out. That's my next price target. Now, of course, we want to reassess this. After it gets down there, I would want to reassess this. But from the way it looks for the NASDAQ, it is extremely bearish. We're up here, high, low. We're probably going to have some sort of a pop or consolidation for a higher low and then lower low down to here. Now, at this point, the relative strength index right here might be oversold. Probably not on the weekly, but maybe on the daily chart, it's going to be oversold. Because it's going to be oversold on the daily chart, at that point, it's going to be, traders are going to look at that and they're going to try and buy the dip. So I think it gets down there. I don't think it gets lower, but that is a primary scenario. Now, of course, when it reaches that price, then I'm just going to relook at this analysis, redo the analysis, and actually take a look at it again. But that's my price target right now, is at 9,000 to that 9,700 level. Now, what about the Russell? The Russell's a lot weaker on the way up, and that also means that on the way down, it's going to be a lot stronger because it didn't go up as much, so probably won't go down as much. So on the Russell, it's a lot weaker because it's more of an industrial index. And right here, we were chopping in this range. We call that going in balance. Let's actually look at this on the 1 week chart. So we were chopping sideways right here on Russell futures. High, low, lower high, higher low, until we broke out of the pattern. Now, what happens when you break out of balance? Well, balance is simply when you go like this. You just go choppy sideways action. That's called balance. That's what we had right here. We broke bullish, and whenever you break bullish, one of two things can happen. You either break bullish and continue to go higher, or you break bullish and then you return to to the bottom if you look up and you fail. That's exactly what happened. It looked up, it failed, it's now starting to come back down, and right here would be the price target, lower end of the balance. The thing about the Russell is that even though it hasn't gone up as much, it doesn't have as much momentum, it has very good structure. It does not have the same amount of air pockets that something like the NASDAQ has. And so price target for the Russell down here on the 1344.4 level down here towards the bottom. I'm expecting to get to the other side of balance. The Russell is going to be a lot less bearish than the NASDAQ because on the way up, the NASDAQ went up a lot. So on the way down, the NASDAQ will also go down a lot. So thanks for watching through this video, everybody. Hopefully it was a nice quick analysis answering all those questions right there. If you guys want more content like this, link in the description below, pinned inside the comments section. Get a free trial of our trading advisory. In our trading advisory, we have trade alerts primarily on options, but we also trade futures, commodities, stocks, bonds, currencies, etc. You name it, we trade it. We put out videos like this all the time. We also put out educational videos on institutional style portfolio construction. We answer all your questions, and we also take ticker requests. So we do a lot of things over there. If you guys are interested in any of that, get a free trial. Link in the description below, pinned inside the comments section. Thank you for watching, everybody, and we'll see you next time.